China's economy is slowing, and the authorities in Beijing are now expected to deliver a big new stimulus package. The Fed's decision on Thursday morning dominates the outlook, and New Zealand's housing market is set to bloom with the spring weather. That's coming up in our 5 Things in 5 Minutes. And then in part 2 of a bonus deep dive interview with Australia's Asia Society CEO Anthony Berbelo at the recent ANZ-sponsored AFR Asia Summit, Anthony discusses the nuances Australian businesses are having to deal with beneath a regional geopolitical debate.
I think these strategic imperatives are very strong, but it's how you work out how does that gel with the economic realities of what you're trying to do. I think just starting to enter that period.
But first, in 5 and 5 with ANZ, China's economic data dump over the weekend was disappointing. Here's ANZ's Chief Economist for Greater China, Raymond Yung.
Almost all data points disappointed, with the retail sales down to 2.1%, and also industrial production is only registered 4.5%. I think this is one of the lowest that I've seen in the recent years. All data point to a slowdown of the third quarter number, and I don't expect the September figure will have a strong rebound.
Number 2. Raymond is now expecting the authorities in Beijing will engineer a stimulus package to generate growth and some inflation. The nominal growth versus real growth distinction is important here.
So we expect the central banks, the People's Republic of China, the PBOC, will ease monetary policy, and we expect an imminent cut of the RRR to inject more liquidities to the system, as well as interest rate cut. We prefer the central bank to cut the 5-year loan prime rate by 20 basis points so that the property market will be stabilized. Now, it all depends on whether the governments have the determination to do that.
Number 3. The big event coming up in global markets this week is the FOMC's decision on the Fed funds rate on Thursday morning, Australasian time. Will it cut for the first time? And will it be 25 basis points or 50 basis points? Markets nudged their expectations for a 50 basis point cut up to 40% on Friday night from 15% the previous day. Here's ANZ's Group Chief Economist, Richard Yetzinger.
I feel like I've been waiting for Y2K. Well, that might show my age, but this has been such a well-telegraphed, anticipated FOMC meeting. There are still some recalcitrants hanging on to the Fed might do 50. That just seems unlikely. There doesn't seem enough urgency in the numbers, certainly not in the activity side. Maybe the last great hope were last Thursday's jobless claims numbers. Nothing there which suggests the labour market in the US is doing anything other than easing reasonably gradually. The Fed will deliver 25 basis points, which will be the first cut of a series over the next year or so.
Number 4. So what happens to the US dollar when the Fed starts cutting? ANZ's head of FX research, Marja bin Zaman, says much of the downside is already factored in. She's looked at the most recent Fed cutting cycles for some clues.
Back in 2019, the Federal Reserve was cutting interest rates, but then at the same time, global growth was challenged. And so basically, we did not see a weakening of the dollar just because Fed was cutting, but it was really the global growth story which was weak. And in that scenario, given that the US dollar plays a safe haven role or a reserve currency role, we saw the dollar remain firm. And so you could argue maybe there might be some parallels to the current cycle, depending on how the global growth story evolves.
Number 5. New Zealand's housing market is in a bit of a holding pattern immediately after a rate cut and before a burst of activity with the arrival of the sun in the southern hemisphere. House prices fell 0.4% in August and sales volumes remained weak. But ANZ economist Henry Russell is hearing anecdotes of busier times ahead, thanks in part to that sun.
Spring is a big season for the New Zealand housing market. Looking at what we've seen recently, the housing market still looks like it's in the depths of winter, and a pretty severe one at that. But obviously, as the sun comes out, so does people's confidence tends to return, and we do start to see a tick up. But that is really going to be the big test, whether we do see that pick up this year and how strong it is. Certainly at the moment, anecdotes are suggesting that we are starting to see people looking to get into the market, but that hasn't been reflected in the data to date.
Henry Russell there. Now, in our bonus deep dive interview from the recent ANZ-sponsored AFR Summit in Melbourne, I asked Australia's Asia Society CEO Anthony Berbelo whether businesses were more aware of the nuances involved in the new geopolitical backdrop to Australia's relationship with the wider region.
I think it's still very early days, and partly it's because the direction in terms of let's call it the strategy of this stuff. So for strategic reasons, for geopolitical reasons, the government is talking about industry policy, it's talking about the security of supply chains, about securing rare earths, those kinds of things. So the strategy and the direction of that is clear. What I think it's coming up against is the economics of that. Does it make sense economically? Is it possible economically for a country of Australia's size and of our financial resources? A China or a US can pour billions of dollars into industry policy. We can pour in a couple billion, but it is much more of a challenge. And I think that's where that reconciliation of the strategic imperatives with the economic realities, that's the phase we're also... You see that debate in the Financial Review. Does this Made in Australia stuff make any sense? I don't think it'll simply be pushed away because I think these strategic imperatives are very strong, but it's how you work out how does that gel with the economic realities of what you're trying to do. And that's going to be, I think, just starting to enter that period.
So this was the first AFR Asia Summit. Is there an appetite, you think, for a more regular thing?
The reason we did this is, the government quite rightly says with both the strategic challenges but also the economic opportunities we face in Asia, this will require a whole-of-nation effort. And we heartily agree. But what that also means is if we need a whole-of-nation effort, we also need a whole-of-nation conversation. So the reason we did the summit and the reason we partnered with AFR is to try and have that big annual whole-of-nation conversation that brings together the security side of our relations with Asia with the prosperity side of our relations, that brings together different sectors, importantly, that brings together voices from the region, because a lot of this is also about maintaining a contemporary understanding of a region that is changing almost weekly, whether it's on the strategic side or the economic side. There's no point always trying to second guess that from here, bring voices from the region. So we've had 11 speakers from the region: China, Japan, Indonesia, India, the Philippines. So that's been great. It's fair to say it's been pretty successful. Over 300 people kind of registered, really dynamic, and we had a bit of fireworks on a couple of panels, which was exactly what we wanted.
Australia's Asia Society CEO Anthony Burbalow there, speaking to me from the recent ANZ-sponsored AFR Asia Summit in Melbourne. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, September the 16th. Catch you tomorrow with more on that potential China stimulus package. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.